Hello, everyone. Welcome to GPU Verse Live Dialogues, episode 15. I am Maha Shah, Senior PR Manager at Input Global, a global communications agency connecting startups with the media, and I'll be your host and moderator for today's conversation. For those joining us for the first time, where have you been? GPU Verse Live Dialogues is a global thought leadership series where founders, investors, operators unpack what's actually shaping the future of AI, Web3, and decentralized infrastructure, cutting through the noise beyond the headlines and the hype. Alongside these online dialogues, there are in person meetups in India and the UAE, where GPU Verse builds a global community of builders, capital allocators focused on the next era of technology. And 3 years into the birth of ChatGPT, and life as we know it has already been changed. Today, our topic lies at the intersection of AI and Web3. Capital is moving faster than regulations, but where is smart capital flowing? And today's topic is all about that. Where is smart capital flowing in AI enabled decentralized ecosystems? And this conversation is going to get very interesting. Joining us today is Tobias Power. He is the co founder and general partner at TBV. And we also have Baramai Rai. He is the CEO of DTC Group, joining us from Thailand. And then we have a key opinion leader, James Richmond, and he is joining us from the UAE. Thank you all for being here. Now, to just kick things off, I just want to start and open the floor to everyone with this question. When you look at AI and Web3 today, what has changed as to how investors are thinking about this space now? Let's start with you, Tobias. Can we call you Toby?
Yeah, absolutely. You can call me Toby.
Awesome.
Not a problem. Tobias, Toby, people have different pronunciations for it. But yeah, first of all, thanks for having me. Pleasure to be here. I'm also calling out the beautiful Thailand, Bangkok, the future of Web3. And yeah, we run a venture fund. We invested in 254 projects till date over the last 7 years in the industry. And obviously, yeah, over the last years, this industry has shifted a lot. As probably, DTC also strong investor, and even from a KOL perspective, I think James, you can confirm that there's a lot of big shifts happening at the moment. And crypto is a very hype slash vertical driven industry where one time you invest in Bitcoin, the other one you invest in AI, and then you pivot to RWA, and kind of the whole industry follows in waves. And I think now with AI, for us, AI vertical is a very interesting vertical, but we don't really look at it as a standalone vertical. AI, I think is going to be a technology component that's going to be part of almost every single business in one capacity or the other. Some are more AI enabled, some are more AI driven. But we already see that almost every single company that we talk to has an AI component, right? Which is, might be, again, another hype cycle, and that might change or not, depending. But obviously, I think we all agree that AI will be here to stay. I think the biggest challenge with AI for us, though, is, a lot of companies use AI to get a different multiple on the valuation, because it is something that's obviously right now intrinsic and interesting. And every company claims to be an AI-first company, versus if you look on a deeper level, most of them aren't. Right? Most of them are just using AI as a technology or like a plug-in to ChatGPT or whatever it is, which LLM you're using, in order to enhance a customer journey or to enhance a flow perspective, whatever it is. But not an intrinsic AI business. And obviously it's difficult as some of these like major companies are running and shipping out updates every single time that makes other companies irrelevant overnight, basically. So I think it's a difficult vertical to invest in. It's also, of course, has a lot of potential, but I think you have to be very well vested in AI to fully understand it and keep up with the trends, because it's also an industry that's extremely fast moving, and almost every single week everything changes, right? And
Agreed.
yeah, a lot to unpack on this topic. So
Yes,
that's
a
an
lot to unpack, and you raised some very interesting point. A very interesting point that you've raised, Toby, is, and Barama, I'm going to open the floor to you, that a lot of companies, because of the hype, because of the high valuations, are claiming to be AI first. So how do you do your due diligence? How do you take out the best ones and make sure that they're really AI first companies when you put your investor lens on?
Thank you, Maha. I mean, like what Toby mentioned, AI is here to stay, and we all have been impacted one way or another, even in our personal life with AIs. And I'm sure most of the listeners and all of us here use AI on daily basis. I talk to ChatGPT more than I talk to my fiance. That's an argument we always have. Um, with AI being implemented to just increase valuation for the high purpose, I think these are the things we are well aware with the crypto space itself already, and that's something also. I'm in Thailand, so in the Thai market, we see sometimes with companies both in Web 2, Web 3, but in the end, it's easily seeable through the real productivity, the real demand, the solving an actual bottleneck, and just not automating curiosity. And I think one of the example I've seen great is a my friend's company called Miosa. Even before launching out to the market, they've tested, they've tried, they've had over 10,000 downloads in a couple days. And that's how you actually prove that a product is actually working, is having real traction even before you launch out fully in the space. And as an investor, that's pretty much how you see through it and see the traction, see the implementation, see the users' feedback, reviews, and see how it can actually uh, solve an issue out there, right? Not just say the buzzword, add in AI in our company and try to raise another rounds of higher valuation, etc.
Yeah.
And that's what we're seeing mostly.
All right, over to you then. James, tell me that are you also speaking to ChatGPT more than anyone else in your family?
I use it a bit. You just need to know the prompts and stuff. If you get the prompts on point, then you're going to get the correct information that you're looking for. In regards to what Tobias said, I completely agree in terms of, and I'll just use this as an example, right? If you look at last year, 24, 23 and 24, right,
Yeah.
we had like kind of an AI hype. I can't remember if it was last year. I think it was last year, wasn't it? Maybe like 8-9 months ago, kind of mid to beginning of last year. An AI hype where you could literally do anything, because no one really understands AI. Like, it's a lot more advanced than people think. And you look at so many AI projects that launched, and 99% of them weren't even AI projects. They were just saying this AI and that AI and blah, blah, blah. No one really understands it. It was more of kind of that buzzword just to basically raise funds or get people to buy the token. And now most of those projects are dead, or they're down like 99%. And I feel like AI is so much more advanced than what we think it is. Like, we think it's ChatGPT and AI agents and stuff, and that's what we kind of mainly understand. That's what I understand anyway. But it's so much deeper than that. And until kind of people are educated and they start to understand it, it's very, very difficult to invest in AI projects. Like, I come from a property background, so I can look at property, I can work out like if I'm going to make money on it or not. If I look at an AI project, the bottom line is I don't really understand it. I can kind of do my research and stuff, but it is very, very difficult to invest in something that you don't really get. And I don't think it's there yet. I don't think the education is there. They're still working on a lot of stuff as well. And it is very, very high risk, because if someone's kind of speaking to you about AI, and you don't really know about it, how do you know if they're right or wrong, or if it could be a scam or something like that? Because there's so many projects that have launched, and most of them are just trying to mass extract out the market. So it's very difficult in terms of the AI space at the moment.
Just building on that, I think a very valuable question for our viewers is going to be that from all the recent funding rounds that you've observed, what do you think, like can we set the valuations realistically, especially when it comes to, like Tobias mentioned, just cutting through the noise, taking out the fluff from the projects? How do you set realistic valuations?
Valuations in terms of, what do you mean in terms of what the company's worth?
Mm-hmm. Yep.
Well, this is the problem with Web3, right? Is most of it, unless it's like an RWA project where they've actually got something behind it, how can you really value it? Because most of it's virtual. Like ultimately you'd value data. Like, for example, if someone's got X amount of people signed up or they're bringing in revenue, that's how you'll value a business. You can't really value a business purely on the tech, because it's only worth what someone's willing to pay for it, unless it's a comparison of another company and their valuation is X, Y, and Z. And then you can use that as a comparable, and then you can work out your price. But if it's something completely new, it's very hard to value something like this, unless it's solving a problem and someone needs it, and then it's worth what someone's willing to pay for it.
So as an investor, would you suggest like a checklist? Because you bring a valid point that most of the investors don't have that detailed, technical expertise to judge AI projects or startups. So what would be a good checklist to go by?
If you don't understand it, don't invest in it, basically.
Love that. Short and sweet. All right, Toby, back to you. Let's start with some more questions just to deep dive. I really, like the point that you said that a lot of companies are just claiming to be AI first. So how would VCs evaluate AI first projects versus the traditional AI startups? Because, like with AI and Web3, a lot of VCs were earlier skeptical. So how do we, what are the signs that you pay attention to?
So you're specifically asking for how to evaluate AI first companies, or just companies in general?
AI so AI crypto, AI first crypto projects, because we're just tying it in with Web3 versus like the traditional AI startups.
Got it. So number one is, I think there's a couple of different angles to touch on here, right? Number one, of course, the most important thing is that a company fits your hard criteria, right? It doesn't matter if it's AI first or not AI first. If the founders are not good, if you don't believe in the execution of the founders, it doesn't really matter what the company does, because you probably won't write a check. But let's assume that all of these things are panning out, right? And you can put a check behind all these different points that VCs normally look at. I think what for me is very important is the truthfulness of the story, right? So if I get on a call with a founder and they speak about AI the entire time, and then we do a deep dive, because we typically have like a founder due diligence, we have a technical due diligence, and a legal due diligence, right? These are like kind of the three main steps that it goes through. And the founder due diligence predominantly is about how good is the founder's storytelling? How convincing is he? Do we believe that this person can eventually attract interesting hires, or can he sell, right? Because sales is always an important part. And then in the technical diligence part, which is done by our dev team, that's where we obviously go deeper on the technical side. So if the founder story doesn't match with the technical diligence, which happens actually quite a lot, people tell you, we are intrinsic AI business, everything is that, actually is that. And then when the technical team tells us, basically they're just a ChatGPT wrapper, then that's an immediate no, right? And it's not necessarily because the business is bad, it's just because the founder tries to trick you in a sense, right? Because I'm honestly rather have a founder that just tells me how it is. We are a ChatGPT wrapper, but our expertise is go to market or something else. And this is how the project can succeed. But I think the most important thing of investing in a company is transparency, right? And it's can the founder clearly articulate what the project does and what it can't. I also think personally, I love when founders tell me the problems that they have.
Mm-hmm.
Right? So for example, they tell me like, we're trying to be an AI company, but we're lacking data. We're trying to figure out synthetic data, but we don't have access to it. Or like, we have challenges with XYZ technical part. Because that's, every startup has challenges all the time, right?
Yeah.
There's no startup in the world that doesn't have any problems. And problems are a good thing, because once you understand your problem, that's the first way of solving it. But there's a lot of delusional founders out there, right? When you ask them what's your biggest challenges, it's like, oh my God, yeah, we don't really have much challenges because we're so, no. Like, being a
Mm-hmm.
founder is like eating glass, right? You just wake up to a car crash every single day. Every day there's another problem. And as soon as you accept that reality, I
Yeah.
think it becomes a lot more for an investor to support, value add, and also make a careful decision. Because I just basically have to figure out, can this founder overcome this problem? And of course, if you have like an AI first company, you typically have a very strong technical team,
Mm-hmm.
right? Because if you're really an intrinsic AI business, most of your value creation centers around the AI part, right? For me, an AI intrinsic business is when value is being created or money is being generated through AI as a technology, right? Because it always comes down to where money versus value is created. And if AI is supportive to creating value, for example, to enhancing a customer journey, or like
Yeah.
to enhancing an output, or to accelerate something, you're not an intrinsic AI business. It's a support function. But
Mm-hmm.
if you are an AI agent company, or like, I don't know, you create a new LLM, whatever it is that you're doing, that's where value is being created, right? So your value of your company can almost one-to-one be directly reflected to the technology that is implemented. And I think
Yeah.
that's what we look at, right? So if we want to know if a company is really AI first, I don't actually care about anything else than like what is being used in order to create value, which either could be just an increase in valuation of the business, it being more valuable, more data being collected, more customers being onboarded, or just generally like the revenue part, right? What product does create value and how is that connected to AI? So summarizing that, the founder story has to be consistent with the technical diligence. If that is the case, then we try to understand what type of technology, what type of feature, what type of product is responsible for 80% of the value being created. And if that is in context to AI, then you would say this is an AI intrinsic company or an AI first company, as you mentioned it.
Got
And if
it.
that is not the case, then it's typically the other way.
Got it. Really interesting facts, and very good way to dissect how to, approach investment into a company. And I agree with you. Like being a startup founder is like waking up to a car crash every single day. Mr. B, if I may call you, I just wanted to throw this next question at you because you sit at the intersection of operations and scalability. When it comes to different categories of AI and Web3, which ones are you most bullish on? Is it Deepin, wallets, DAO? Which one do you think is using the best, technology when it comes to tying AI with Web3?
Well, for me personally, we have just started structuring our new fund for investments in both Web3 and AI, especially
Mhm.
intersection there. As my personal view, I haven't had chance to actually found the right convergence between both yet. I've seen some couple products in the market that are working well, but
Yeah.
as of most investments we're having right now, especially in Thailand market, it's quite simple. It's basically companies that are integrating ERP systems for very larger companies, and they're just able to downsize, save more costs, and increase productivity through AI. And that's basically the very gist of where we're focusing at the moment. In terms of Web3 companies that are implementing AI, for us at DDC, I haven't seen through like the right products to invest yet at the moment. I've seen some that has been doing very well, but like what we touched on initially, there's a lot of buzzwords being thrown out, a lot of crazy valuations, and
Yeah.
a lot of things that what James mentioned. I don't kind of understand it sometimes, so it's quite tricky to invest in those companies at the moment. But I'm sure we're gonna see more and more perfect combination convergence together between both Web3 products and AI. I myself was in like the early stage of this AI trend, especially in the degen space as well. So I got wrecked a lot and learned a lot in the direct way how to kind of figure out what actually is properly implemented, has actual productivity, and is actually in a way, at the very end where we need to measure if it's increasing revenue, increasing productivity, saving costs in any way for the company or not.
Got it. Got it. Thank you so much for those insights. James, over to you. A lot of people, are investing in infrastructure, AI infrastructure. According to reports, only 5% of these AI infrastructure companies actually give you return on investment. And last year, seven of the biggest tech companies invested more than $350 billion. So on those, return on investment numbers, like only 5%, very low? And why do you think that, in companies continue to invest in infrastructure versus, let's say, apps?
That's a good question. Personally, the problem with investing in apps is it's to the end user, right? And you can have the best app in the world. If you don't have the right marketing team or it doesn't catch on, it's not going to go anywhere. It's not providing a solution. Apps are more kind of wants rather than needs. Whereas if you're upgrading infrastructure or building something new or helping a chain like move quicker or like integrating something and providing a solution, that's obviously something to invest in because it's tech. But I mean, investing in apps, like so many people can make apps nowadays. Like a lot of people outsource it. The devs in India, Pakistan, like they've got top devs out there. People don't realize it yet, but Pakistan is like becoming one of the leaders in crypto, and so is India. But I mean, you could get this stuff built really, really cheap, put a crazy price tag on it, and the bottom line is it's just an app that you can build, right? So I think it's always best to invest in infrastructure if you understand it and you understand the solution that is solving. In regards to your question, though, it was something about 5% of things returns or something. Sorry, what was the actual thing?
So return on investment, right? So according to MIT, the returns on investment for AI and building an AI infrastructure, investing in AI infrastructure still are very low. So I think, like, would we hit a point where we will see like greater gains, or will, like, once that infrastructure is set up, like what do you think would be the future?
That's got to be a question for MIT for that one. I don't know the answer to that. It's people who are investing in infrastructure and then not making returns from it.
Yeah.
Maybe I should make a course on how to do a good investment then, because they seem to be losing money.
Yeah, I mean, obviously, it's draining a lot of capital when you build infrastructure, and AI infrastructure obviously has its costs. Toby, do you want to shed some light into this conversation? Just wanted to get your perspective as well.
You're basically asking on like the different verticals where AI is mostly integrated. Is that still the main thing? I honestly think like a major application point for AI will be, number one, everything consumer related, like wallets is a great example. I think there's a lot, like basically like a lot of stuff in crypto is very inefficient, right? And I think a lot of, especially in the consumer industry, like consumers are always about convenience, right? They have no attention, they have no time, right? And I think AI has probably a massive implementation area here in order to just remove the friction a lot of these points.
Yeah.
I think in B2B side, I think it will definitely also have its place. I think it's less of an immediate implementation. It will probably be a support function, but typically B2B, projects or products, people buy it because it solves a problem, right? And that's why you also see like typically UI UX is not as important in B2B as in B2C, right? Because look at trading platforms in B2B segment, they're all pretty ugly, right? This would never fly in a B2C segment. It has to be pretty and nice and easy and convenient. I think also in stable coins and in trading, this will be a very, very important implementation segment. Rebalancing of stable coins, yield generation for stable coins, like effectively automated portfolio management is very interesting. It's even for like the fund level interesting, right? Because we spend a lot of time figuring out which project is about the TGE, when to sell, when to buy, when to do all that stuff. And if you have someone that, an agent, for example, that does that for you, that measures all these things, do we receive the right tokens in the wallets? I mean, there's millions of implementations that could benefit from artificial intelligence, of streamlining processes, also reducing risk to an extent, right? Because humans are always prone to error, and I'm a big fan of automating as much as possible. But like it's very interesting in crypto. A lot of stuff is still very manual, if you think about it, right? How many times, if you want to transact, how manual that is quite frustrating, actually, right? We are such a forward-thinking industry, but still a lot of the projects and products that are launching, and especially if you're like a little bit more crypto native, going away from like pure sex account that you have on Binance, but like if you do a lot more stuff, like you realize crypto is extremely manual, right? And I think that's where I hope to see a lot of improvement in the coming years.
Yes, I agree. I mean, these are great examples. Stable coins, also, wallets, and the biggest friction, the biggest pain point for mass adoption is definitely, or having people onboarded to crypto is definitely like because crypto is very manual and not easy for the masses or your grandmother to understand. I just wanted to take a step back and talk about trends, and if you guys are seeing any trends when it comes to different regions. Where do you see most of the cool startups are coming out? Where like Toby and B, you are based out of Thailand. So where is most of the growth coming in? Being investors, like which countries or regions are you bullish on? So let's start with you, Baramai.
In Thailand specifically, if we step aside, Web3 AI a little bit, we're seeing a lot of growth in e-commerce and F&B, and this is a playbook that we've been seeing since the last early 2024 onwards. A lot of the F&Bs, and especially products here, whether it's milk tea, whether it's snacks, whether it's snacks in the 7-Eleven, these are the things that it's seeing a huge growth, and we're seeing a lot of companies like blown out proportions. For example, we have some milk tea brands that we invested, which they were doing a 400 million Thai baht revenue in a year, and within the third year they're already doing 4,000 million Thai baht, which is like a direct 10x, and that's the direct influence from our neighbor countries as well. Thailand is following a lot of the trend within like the Chinese landscape as well, and since they also influence heavily within the platform we use like Shopee, Lazada, TikTok, that's also something we're seeing a huge growth on, since there's a lot of investments being poured in these areas, especially affiliates marketing. Turns out every influencer now in the Web2 space are affiliate marketers. So that's the area we're seeing a lot of boom in. We're also seeing a lot of new innovative investments in towards robotics and payments infrastructures. That is what we're seeing a lot in Thailand upcoming in the new year. And surprisingly, this is something I'm very happy to see, is a lot of the companies within RWA areas, especially the real estate, property development companies, are exploring tokenization already. Now, there are a lot of gaps due to regulatory frameworks and what can be done and can't be done yet. but it's also moving towards where it's getting more open and it's allowing people to more seamlessly integrate tokenization into their company. If you guys look into what has been upcoming, there are very well reputable companies in the top 5 categories of properties, real estate in Thailand already shifting towards this area. And I'm quite confident in 2026 we'll be seeing much more RWA-based project from Thailand upcoming. There's one project called Six Protocol, which it's also by my partner. They actually just hit $100 million in valuation locked as well. So that's something very exciting to see from Thailand market as a whole.
Awesome. Thank you so much. James, I'm going to hop over to the UAE. What trends are you seeing here in terms of AI Web3 investments? And like I was just at the Abu Dhabi Finance Week and I was just quite overwhelmed to see the crowd and the people.
I think that, look, if you're in crypto and you're in Web3 and stuff, I think the UAE is the place to be. Like, it's the most forward-thinking part of the world. Like the Middle East, if they want something done, they do it immediately, and they're attracting a lot of money. They're investing a lot of money. I think that Europe, UK especially, are focusing so much on regulations and not really kind of on growing. They just get left behind. Obviously, you've got the US as well. It was actually quite funny because everyone thought that Donald Trump coming into power would be the best thing for crypto, including myself. And he literally came in and just mass extracted from the whole market. I think the best thing would be Joe Biden to have stayed in because he doesn't even know what's going on. He doesn't know what day of the week is. So that probably would have been best, and it would have probably stayed a bit more decentralized. But obviously you've got the US because of Trump kind of pushing everything in terms of cryptos. They're trying to take over because he understands that if he doesn't push it, the US don't push it, we're going to completely take over in the Middle East and Asia. You've also got Pakistan. CZ is now an advisor for Pakistan in Crypto Council with Bilal. I don't think people realize like Pakistan are throwing a hell of a lot of money, and these guys have got billions and billions of dollars that they're throwing into crypto. Same with India. So I think this side of the world is really taking it very, very seriously and just trying to kind of be forward thinking and bring all of the money over here and be advanced in terms of tech, crypto, Web3 and building, just to kind of have everything over here. So I think the Middle East is definitely taking it. I don't think anyone's really competing with the Middle East at the moment.
Gotcha. Toby, over to you. Which regions do you think are the startups that you're investing in are coming from?
Great question. Then I think there's a couple of nuances. From what we see, number one is probably the US still, where we see the most amount of founders coming from, legit founders. Unfortunately, we don't see much happening in Europe at the moment. There's a couple of selected cases, but it's mostly Web2 founders that try to do something in Web3 or use it like somewhat surface level. I think Southeast Asia is interesting, even though you have to make a very big distinction between the countries, right? Versus, I don't necessarily think it makes a lot of sense to, focus on the Philippines as much as I love the country, or even like Laos, Cambodia, Myanmar, Vietnam. It's just too early. Sure, you might hit a home run here. There's a couple of companies coming out of this, but the volume is just very, very different to, for example, the US. Now, one benefit you have when you are in these type of emerging markets, of course, you have the benefit of the valuation. You typically have very steep valuation discounts. So for a lot of early stage investors that do not have a massive fund and are, well educated, invested in this type of the world, I think it makes sense. And now, obviously, a lot of people are talking about the UAE, right? Talking about the Middle East. I don't actually think there's any projects coming out of there, right? I think it's not a market for founders. There's a couple of different reasons. Number one is it's not a city for founders, right? If you have no money trying to build a startup, you're not moving to Dubai, right? It's just the reality of life.
James, do you agree?
I completely agree with Tobias. When I said the UAE, I meant more for investing. The money is in the UAE investing in projects. It's
Agree.
crypto, Web3. But in terms of founders, he's completely right. People think it's cheap in Dubai. It's not. When you live here, the thing is trust me.
Yeah.
So
No,
I
for
agree.
a fund that's raising, I think Dubai is a great place to be. Also, you know, everybody comes through Dubai either because of the conferences or because it's literally in the middle of the world. If you want to go to Asia or the US, you typically transit somewhere in the UAE. So I think it's a fantastic place to be. However, it's not a city built yet for founders. And I think that's you know, I think it kind of gives a very narrow range of where most of the founders are coming from. I'm a big believer in Singapore because that is a very founder friendly place, and smart people are coming out of there. And then you also have to keep in mind that there's this, like, what I call trickling down effect of talent. Like, you know, Grab, for example, in Southeast Asia brought a lot of great founders to it, right? Because people are learning how to organize and scale a big organization, and then eventually they either made some money or they decide to do something on their own. And then these guys are like educated, they understand how to run an organization, how to manage a team, how to fundraise, all these different skills that are necessary. But hands down, like 60% of all the investments we've ever done probably are from the US, or at least US based founders.
Yeah.
And the remainder is Singapore, a little bit of like Chinese influenced founders coming from Hong Kong. I
Yeah.
would say Thailand is also an interesting market, but not yet so fully on Web3. I think there's a great Web2 founders, and I think you know, it's just a bit of a challenging situation for like people to understand where they are in the political framework. Which brings you then to my last point: is typically you have founders in places where the political landscape is somewhat secure, right? And the prices and the infrastructure, meaning there's accelerators, there's colleges, there's universities, there's you know, co-working spaces, all that stuff, what typically attracts founders. So yeah, that's sort of my high level global update.
No, those are interesting insights, and it's funny that you bring up Singapore as well. It has great infrastructure, but do you think that the regulations could be a little stifling for founders in Singapore?
Absolutely, it has already, right? It was right before Token 2049 last year when Singapore came out with this announcement that brought a lot of confusion to the industry. But I mean, Singapore at the end of the day is trying to protect their people, right?
Yeah.
So if you market to Singapore and you're based out of Singapore, you should be a licensed business. And I don't necessarily think it's a major issue, right? Because I think we also need to understand that we want to go away from this chaos kind of like cowboy world that we have been in for a long time. So I'm not necessarily against I'm not against regulation if it is done within means and not overcomplicated. For example, like Europe with the MiCA regulation, I think it's a nightmare, right? But that's typically what Europe likes to do. They try to overcomplicate a bunch of shit and try to put a bunch of red tape on things. I'm German, so I can say that. And I think that's what the benefit in the UAE is, also with Abu Dhabi ADGM, but it's just not made for early stage companies. It's made for a Bybit or like some large companies that come here that have capital resources, that want to have a safe place to grow and eventually IPO. Whereas Singapore still has, I think, a great support network. It's at least very clear of what you can and cannot do. Sure, there are harsh penalties if you go a different route, which I don't necessarily think is a bad thing either.
Yeah.
And then you have kind of Hong Kong, which was very exciting for me for a long time, and they kind of lost its track a little bit, and it's now kind of desperately trying to figure out how to get back on track. And you know, consensus happening in Hong Kong, so I'm quite interested to see how that turns out and how many people are going to show up, and you know, but yeah.
Yeah. No, Hong Kong definitely had the crypto first advantage. Do you think it's lost it, or do you think it has the potential to regain it?
Honestly, it depends a lot on China.
Yeah,
Right?
for sure.
Because Hong Kong is kind of like the jumping ball of China. And a lot of people are very, it was even with us, like we actually launched our first fund out of China, and then China went into this whole idea of like crypto is illegal. And then we had two options: either we go to Hong Kong, we go to Singapore. We decided to go to Singapore.
Interesting.
And I think that's what just gives you a bit more confidence. You're a bit further away. You're not as tied to the Chinese ecosystem or the Chinese government. And I think that's what Hong Kong is kind of struggling with, right? They want to be this independent part, but then still get, China catches up every once in a while, as we have seen. I think that doesn't make it always the most attractive place for people.
Yeah.
But again, then we also differentiate between where you want to incorporate a company and where do you want to stay as a founder. I think Hong Kong is still a great place to stay as a founder.
Yeah.
If you can afford the living prices. But other than this, I think it's in a good place. But I would probably rather incorporate my company in the UAE, in Singapore, or like in other places where I have just more clear like projection of how things might pan out.
Gotcha. All right. So I'm going to move to another exciting round. It's going to be a rapid fire round where I'll just throw out questions and I just want one word answers from you guys. No explanations. You just have to pick like one option. I'm going to start with Baramai. The first question is AI and Web3 in 2026, hype or opportunity?
Opportunity.
Great. I'm going to pass the same question to James. And Web3 in 2026, hype or opportunity?
Opportunity.
Toby, same question to you. AI and Web3, hype or opportunity? All right, we'll come back to Toby. I believe Toby has lost like Wi-Fi, can't see him. All right, Toby, you're back. AI and Web3, I'm going to repeat the question. Can you hear me?
Yeah, now I can hear you again. Sorry.
Okay, cool. Good to have you back. So AI and Web3, hype or opportunity?
Opportunity.
You thought about that for a while. Okay, back to
It took me a while to receive the sound.
Gotcha. Mr. B, back to you. Bigger capital pull, infrastructure or applications?
Infrastructure.
Gotcha. James,
Same infrastructure.
Toby,
Same infrastructure.
I want you guys to do something so I can. It seems like everyone's picking the same option. Deep in, early or crowded?
Early.
James.
I'm just going to say the opposite from these guys.
Yes, that would be very interesting. Token economics, essential or optional?
Optional.
Toby?
Oh my God. I'm frozen again. I think it's optional.
Paramai?
I'll say essential.
Interesting. Why do you think it's optional, Toby, and why do you think, Paramai, that it's essential?
Honestly, I was just going opposite.
All right. Let's move to the next one. AI agents, now or next?
Next. Not now. Next.
All right. Paramai, AI agents, now or next?
It depends on the context, but as of what we're doing, I would say now.
Toby, now or next?
Now.
Investor mindset, James, bold or selective?
Investor mindset. Select.
Sorry, we lost you there for a moment. James, investor mindset.
Selective.
Selective, gotcha. What about you, P?
Selective.
Toby?
Same.
Gotcha. Everyone agrees that it's selective. And 2025 funding cycle, uptrend or cautious?
Cautious.
Very cautious.
Very, very cautious.
Great. Okay, one sentence for each to just kind of sum up the future of AI and Web3 and where it's heading. Let's start with you, James.
Repeat the question.
So the future, like if you had a crystal ball, where do you think the future of AI and Web3 is heading?
I think people need to understand it first of all in terms of in depth, because in terms of like investing or using it, or everyone kind of thinks, yeah, AI is obviously ChatGPT and AI agents and stuff, but it's more than that. So I think kind of education and really breaking down what it is and understanding it, and then kind of having direction and making an opinion on it.
That's a good point, and that's why we have KOLs like you to educate the people.
Well, I'll be leading the blind then, won't it? Because I don't know anything about.
All right, Toby.
Still learning.
The future.
I feel, I mean, obviously education plays a massive role, but I think also trial and error, right? I think people spend too much time reading and less time doing. I think you just have to use it every single day. Like Mr. B said, talk to the AI more than to your girlfriend. But just like use it every single day and get better and understand it.
Got it. B, what are your thoughts? Oh, you're on mute.
You're asking future of AI and Web3 in one sentence. Yeah. So yeah. I had a very good quote from my good partner. So they focus on pure AI investments. He's also well versed in Web3. So what he mentioned was AI will focus on scaling intelligence, while Web3 will focus on defining the trust and finding value within that intelligence. Somewhere around this, but I really resonate with that.
Yeah, no, that's a very, very well, a thought that we should just, kind of think about, and it's just very, very deep. So thank you so much for sharing. Before we wrap up, let's just, kind of make a prediction for 2026, since it's still the new year and everyone's wishing, we're still in the first month of 2026. Any predictions in terms of investment, in terms of like what investors will be looking out for this year? Toby, let's start with you.
I'm quite optimistic. I think we just need to find something that's attractive again and brings liquidity into this industry. I think that's been a big challenge ever since. And I think we need to move away from this general launch style that we currently have, where sexes are dominating with, insane listing fees, and it just gets so difficult for a project to launch. I would also hope that we get back to, right now token launches and products are basically uncorrelated, in my opinion. You can have a great product and you can make revenue and basically tick all the boxes of a normal startup that will be successful. But at the same time, you could launch and it could go absolutely nowhere. And I think that's a really big challenge that just hinders innovation, right? That blocks projects. And I hope that, this gets more rewarded in some way or the other. Yeah.
Right. So, James, over to you. Are you as optimistic as Toby is?
I'm optimistic. I think we're going to have a very good year in crypto. The problem, obviously, you have, for example, with exchanges and just futures, for example, they can see all of the longs and the shorts, and that's how they can just liquidate everyone. Like Binance, CZ is like the cabal of crypto, right? It's like the exchange is like the banks. So we can be optimistic, everything can look good and stuff, but the bottom line is it's not in kind of God's hands, it's in people's hands that are just kind of manipulating the markets. Donald Trump can do something that completely crashes the market. We can have a black swan event. In regards to obviously quantitative easing and stuff this year, I think that we're going to have a good year in crypto. Last year wasn't great for a number of reasons, and hopefully this year will be better. Everything's kind of lined up to be better. I think Bitcoin is going to see all-time highs, not as high as people think. I think maybe between 160 to 180. I think Solana is probably going to go to between like 400 to 500. Hyperliquid. I think a lot of money is going to continue flowing into the decentralized exchanges, like Lighter, Hyperliquid, Asta. I think they're going to do exceptionally well. Privacy coins as well. Monero's already started to move. Obviously, Zcash is just dumped because the team have left it. I think people are missing kind of the privacy and the decentralization side of crypto, because over the last kind of like 24 months, everything's got very centralized. But at the same time, there's been so many cowboys coming in. You've obviously had Solana launch and Pump Fund and stuff, and now anyone can launch a project. You don't need to be a dev. Like some 15-year-old can launch a project. And then it's kind of made this like thing in crypto where people are launching projects left and right, and the liquidity is spread so thin, no one actually knows what's going to pump, which is a massive problem. I mean, like, previous cycles were a lot easier to predict because there were less projects, there's liquidity in the market, something had good tech, it had a good team, and you can kind of work out, all right, this has potential, this is going to do well. I mean, this cycle is extremely difficult. And the ways to make money is kind of timing the market, but it's timing the market. You need to know people, you need to have kind of insider tips on what you think is going to happen. You need to understand where the money's moving, follow the smart money, and just kind of bet on what you think is going to go up. But yeah, it's very difficult, this cycle, but I think we're going to have a good year in crypto.
I love the optimism, but a lot of macro geopolitical indicators also have an impact on crypto. Baramai, do you share the same optimism as the rest of our guests, or do you have a different concept?
Thank you, Maha. I 100% agree with James and Toby. I personally am always bullish, and I would say if you're already in the market, you should be bullish for the sake of the whole market itself. But why is because I do think there are a lot of changes happening already. We're moving from more hyped, crazy growth market to looking towards something more sustainable. And I think the previous cycles of crypto has already died, right? We're moving towards something where the market is maturing, people are more educated, and if we're just looking back towards previous altcoin run, etc., I don't think that's going to happen, but we're going to see in different kind of pictures. And I very much agree with what James was saying. I'm also getting into the privacy coins, checking into a lot of these perp decks, Aster, Lighter, Hyperliquid as well. And especially from where I stand in Thailand overall, we're also seeing a big shift towards the Web3 tokenization itself. A lot of the investments, a lot of the family offices are more actually keen towards having certain percentage of their portfolio into crypto. And that's quite a bullish thing because, we came from where everyone were calling people with investments in crypto scam, right? So that's where we are now, and I'm very bullish overall. Of course, the narrative, the whole objective of the space has changed in terms of what will rise up, what will go down, but I think it's just basically the market maturing in a good way.
Yeah. All right. Thank you so much, guys. It was great listening to your insights. Thank you for taking out the time, and love the positive note to begin the new year, that we're moving beyond speculation and the market is maturing, and all three of our guests are bullish on investments in AI and Web3. So that's a great way to end the show and start the new year. I also wanted to thank our audience who's joining us from different countries. It's because of you that GPUverse has become a powerful global platform. And at GPU.net, we believe in that compute is becoming capital, infrastructure is strategy, and ecosystems matter more than ever. Follow us on all the social media handles, and we'll continue these conversations both online and in person through GPUverse live dialogues. Until the next time, keep building, keep questioning, and always think GPUverse. Thank you so much, guys. Thank you.
Cool. Thank you.
Thanks. Hello, sorry, Jazz. We wrapped up like 5 minutes earlier. Is that okay?
No, that's fine. That's fine. I'll just exit this one. I'll get on call with you.
Okay, cool.